Hello and good morning. I welcome you to the morning meeting today on Wednesday, the 17th of January 2018. This is Jens speaking and exclusively presenting this format to you here for JFD Brokers. We want to have a look at the market opening, and so far, if you look at the DAX, then, well, it's not that spectacular, even though yesterday's trading day has shown that there is some pressure building, and if US equities will keep on pushing lower, and it was no let's call it taking a short and deep breath or something, but it's probably the beginning of a final corrective move, which will push us back towards 25,000, probably even below that level, 24,400. To this stats, I'll say something a little later. So first of all, here look at the Dow Jones. So still very extended on the upside, and yesterday you can see it here that the market opened, pushed higher, and then pushed aggressively lower. Aggressively meaning here in this case that we fell 400 points from the daily highs, and then we're capable of stabilizing into the evening here. And right now the market can make back most of those losses from yesterday in general, pushing back towards 26,000. But all in all, it looks as if probably the Dow Jones is not yet done on the downside, especially if volatility keeps on spiking higher. And so what we can clearly see is that the DAX profited, first of all, from a comment from several ECB politicians here, who yesterday, in fact, that was, by the way, something I didn't mention yesterday, but I found it out myself in the evening then, that there were some comments which are not that surprising if you look at the current developments in the euro, especially against the US dollar. So what we can see is that the euro overnight pushed above 23 here, and is now selling a little, or is losing some of these gains. The main reason for the push in the DAX yesterday, respectively, this short-term corrective move, which is today bringing a quite interesting level in play here around 121.90, 122. That's something you can clearly see here on a 4-hour chart. These are the lows from yesterday. With a break below that level, there's further room on the downside, which could bring us to as low as 2080, 21. And this bearish divergence here, which is forming, so especially after the market here overnight pushed higher, but didn't confirm this push higher in the RSI 14 here, and this is showing a bearish divergence. So if we break below 122, 121.90 here, there's further room of another 100 pips on the downside, and the acceleration could take place based on several other comments from ECB politicians. So first of all, let's have a look at this, and then we will have a deeper look here at those statistics. So yesterday, in fact, there was the ECB member Villeroy, who said that a recent euro increase is source of uncertainty, requires monitoring because of its possible downward effects on imported prices, so negative impacts on inflation, in fact. So that was one of the reasons why the DAX pushed higher and was at least short-term capable of pushing above 13,300, even though that was not a sustainable move. And it was also one of the reasons why the euro corrected some of its gains of the days before, and pushed towards 122 here. And today there was another ECB member, Novotny, who said that the euro exchange rate must be observed. This is also something which is no big surprise. If you carefully watch here the current the current move here in this in the euro exchange rate against the US dollar in this case, what you can see is that this is definitely something which ECB does not like at all. And it, by the way, makes the upcoming week, Thursday, with the ECB meeting here with Mario Draghi, press conference, very interesting to watch, because it's not that unlikely that the ECB will probably start to somehow try to down-talk the euro. The only problem they have right now is that it's because of the euro strength. I have to say I don't really see it as euro strength, but it's more like US dollar weakness. And I'm not sure whether the ECB can really have such a big impact here on the exchange rate then, and bringing down the euro somehow, even though they, as Mario Draghi mentioned several times, do not focus on that. But that's definitely something which is getting really interesting, and make things quite interesting then next week on Thursday. There are also some sources, by the way, who were quoted from Reuters, I think, where it was said that some market participants may expect, based on the last ECB minutes which were published last week on Thursday, that here probably the ECB will announce something in terms of the further reduction of their asset purchases past September, respectively probably announce something around a complete stop of these asset purchases at the beginning of the year. So that was something which surprised the market, since the market participants did not really expect the ECB to come out really hawkish here. And this is something which was already denied from this source. So we shouldn't expect the ECB to come out with something like that next week, especially when looking at the current exchange rate at the push higher here. So in fact, it's more likely that probably Mario Draghi will give some hints which will lead probably the speculators in the euro future here. So therefore, let's have a look at this chart. Where is it? Here. So it's the COT that the ECB / Mario Draghi will bring up something which will then result in a reduction of this quite aggressive positioning here, even though it's just an indication, but it's nevertheless, it's, well, not just nevertheless, but it's less than 10% of the overall volume which is usually traded in the FX market, even though it's a good indication to see what probably happens here OTC and how speculators are positioned right now, institutionals and that stuff. So and with this in mind, then probably the ECB will somehow try to use a rhetoric which results in a reduction of this quite crowded net long exposure in the euro, and could probably try to somehow push euro lower, even though there were some tries over the past which failed. And so that way euro USD could probably push as high as 125 here, and keep on pushing higher. So all in all, what we can definitely agree is that next week, Thursday, around the ECB is probably a very interesting meeting to watch, and especially in terms of the rhetoric used by Mario Draghi then at the press conference. And now the question is probably, okay, is there a chance to trade such a bearish divergence right now? I think so, even though, yeah, that's a little unfortunate. The thing is that I said something between 122.50 to 122.60 is probably a good short trigger. So this is a 50-minute time frame. And I said that probably such a push to this level is could be considered a short trigger, aiming for an anticipation of the break here of these lows from yesterday. So 120, 190, 122. And then aiming for the region around 121. Okay. Yeah, so that's it. In fact, yeah, I'm sorry. I lost track a little. So it's 120, 22.50, 122.60. So this is a potential region here to consider short engagements against, and then aiming for a break of 122, the lows from yesterday, 121.90, and then going to 121 from here. So this is a short-term bearish setup. Would be appreciated, to be honest, to see such a push towards this level, since everything above 119 is Euro USD bullish on a daily chart, and the region of 121 is a potential long trigger here. which is then probably interesting to see another leg higher, which will bring us to something like 125 to 126 around. So yeah, that's it on the euro. Now let's come to the DAX and the price action here. So very interesting again to see yesterday's price action. So I was surprised to see this high volatility, even though I wasn't surprised to see the Dow Jones putting pressure on the DAX then, which obviously came in around 3 p.m. GMT, and then not just pushed the DAX lower, but pushed it significantly lower to new intraday lows and the region around 13,150 points. Right now, the DAX can stabilize. Right now, it doesn't look as if the DAX is about to see a test of this region. But nevertheless, if the US equity markets come in as weak as they came yesterday, even though it doesn't look like that, if you look at the first indications here, first quotes, you can see that, again, we're about to make it back towards 26,000. But if we make it back to these levels here, and if we drop below that, there could be an acceleration, a more aggressive spike in the VIX then, which by the way pushed yesterday to 6-week highs and higher, I think. So to around 12, and has some further way to go on the upside here, since market is aggressively volatility short. And with this in mind, I think there's a huge risk to for DAX to see another aggressive push lower. The problem in comparison to yesterday is that we haven't seen a very aggressive push higher yesterday. So the only reason why yesterday's close wasn't deep red in the DAX, was only red, not deep red, was because we've seen gains of over 100 points in the morning already. This is something we don't see today, and if something similar to yesterday happens, and I have to say I clearly see chances that the market will see at least another attack of this region here. If there's such a push happens, and if we break below 150, there's a good chance that the DAX then will probably move towards 13,000. If not today, then probably tomorrow, but into the weekly close. And that's definitely something worth watching, even though, again, if you look then at the daily chart, well, what you can see is that the market is still very choppy. So it's no clear, clean structure right here. It would become bearish. The picture would become bearish the moment we push below 12,700 points. So far, nothing big happened, and so we should definitely probably be a little careful in terms of being too bearish, because everything above 12,700 points I think should be considered bullish, and has still some potential on the upside towards 13,530 points. Even though yesterday's drop in the afternoon suggests that if really US equity markets will finally see a corrective move, then the DAX has some probably more room on the downside, all mainly based on a euro trading at a quite elevated level here. And now, nevertheless, let's have a look at those statistics. Here, it's not the Dow Jones we're looking at, but we are looking at the S&P. So what we're looking at is simple. We look at here the longest streak within 5% of an all-time high, which means if we're not trading lower than 5% within the next 3 days, and it's somehow not that likely, even though yesterday has already shown that if pressure builds, market could really quick accelerate on the downside. Nevertheless, if we don't get to see such a push, then we will set a new record for the longest run in history here. And also here, the longest streak within 3% of an all-time high. It has been over 40 months, so since the election of Donald Trump, that the S&P 500 has had a pullback greater than 3%, yeah, which is by far the longest run in the history. And as we know, the trend is your friend. We shouldn't expect this to change. In fact, we should expect this to continue, even though, nevertheless, yesterday already indicates that something's going wrong here. And therefore, let's have a look at the VIX then. I think it's very interesting to see. If you look at the last 12 months, for example, so what we can say is there were spikes which pushed us in the VIX as high as 15 and higher than that. even though those spikes were the reasons for that, it was because some stuff in the White House was going on, let's say. So there was a mentioning Trump impeachment stories, whatever, and connections to Russia, all this, and it resulted in short-term spikes in volatility. But as soon as the volatility spiked, it went as quickly down, or even quicker. Volatility dried out again. And now I think things seem to be a little different, because this push higher in volatility here is not based on such a short-term announcement or news or rumors around the White House or political landscape or geopolitical tensions or that stuff, but it's more like you've seen volatility starting to tick higher, even though the market kept on pushing higher to new all-time highs. And so with yesterday's first move on the downside, it showed, okay, probably the market is a little overheated. So market is extremely bullish right now. Volatility is still extremely low. And with this in mind, if we find out that this is really some kind of yeah, well, I'm not sure whether we should call this the real deal, but it's definitely worth watching how developments here in the market take place, and probably we are about to see at least this 5% corrective move in the upcoming weeks here. And this is definitely something based on the volatility and developments here over the last days, the slight ticks higher, which is definitely something interesting to watch, and which is not based as the months before, which is not based on any announcements from the White House or something. But it's more like it seems as if bigger speculators start to hedge their exposure here for a spike in volatility, and that's definitely interesting to watch here. So that's it on the DAX, and so finally, I think we should have a look here at the Canadian dollar. Today is the rate decision of the Bank of Canada. So far, Canadian dollar doesn't seem that spectacular. Not against the US dollar. Also not against those two currencies I'm currently watching here. Canadian dollar, Swiss franc, respectively. Canadian dollar against the Japanese yen. And I'm still not very sure whether it's such a great idea to be long already. So what we know is that from the 23rd of January, there's a seasonal pattern which takes place to around mid-February, which is bullish Canadian dollar, Japanese yen, and bullish Canadian dollar, Swiss franc. And some might say, well, why not giving it a shot right now? If the Bank of Canada really hikes rates, and probably it's a good idea to be already long positioned. The problem is that the market has already priced in lots of such a potential rate hike, meaning I don't see that much bullish potential if the Canadian central bank really hikes rates today. And on top of that, especially against such currencies as the Japanese yen or as the Swiss franc, the problem is that if really risk aversion hits, or if the market starts to accelerate on the downside, especially US equities, as seen yesterday, we have also seen that Canadian dollar lost against the Japanese yen, but also against the Swiss franc. So therefore, let's have a look here at the 15-minute time frame and have a look here. So that all started around 3 p.m. GMT, and then later 4 p.m. GMT. But you see an acceleration on the downside. It's not much, it's not dramatic, it's not a huge push, but nevertheless, you definitely don't want to be long in such a market environment, and that's one of the reasons which let me be patient here, and I wait for my spot to probably develop then in the upcoming days. I still have, from a seasonal perspective, from this perspective, 1 week. And yeah, why not wait for this week and just see how things develop, especially today around the rate decision. Probably the BOC comes out, doesn't hike rates, which would be a surprise, but nevertheless would be extremely Canadian dollar bearish. Yeah, with this in mind, so I think being patient is probably a good idea. And even if they hike rates, it could be offset from offset from a market then probably pushing towards more risk aversion and resulting in some capital inflows into the Japanese yen, respectively into the Swiss franc, since some market participants probably reduce their carry trade exposure here. So and this is definitely something, again, which is worth watching. So I will closely watch the rate decision, 3 p.m. GMT. And then just see how things go, and start to draw a picture and a potential setup, which then aims to try to capitalize on this seasonal pattern starting from next week on, from the 23rd till the 13th of February, in fact. And that's it from mine. Happy trading. Watch your stops, and if you have any questions, please shoot them over. By the way, around the BOC, also check the website, jfdresearch.com. So you can find it here via the JFD Brokers website, by the way, gsdbrokers.com/en/research-education. You can also find this, by the way, via jfdbrokers.com. That's probably a little easier. So what you can do this here is you can type in jfdbrokers.com and then go via research and education and here JFD research, and that way you're forwarded to this website. And here you can see that you have some thoughts on the daily market report on the rate decision of the Canadian central bank. Feel free to check out the website, and yeah, we talk again tomorrow, 10:30 a.m. GMT. I definitely look forward to it. Happy trading. Watch your stops, and talk to you tomorrow. Take care. See you, and bye-bye.